Have you ever wondered, why do some people earn a lot of money but still feel anxious, still work themselves to exhaustion, still feel trapped and unfree? While others, even if they're not super rich, live comfortably, without worrying about bills every month. Where does the secret lie? It's not about how much you earn, but about how you view and use money. Today, I'm going to summarize a book that has changed the way millions of people think about money, The Simple Path to Wealth by J.L. Collins, and especially answer the question, why the simpler you keep it, the richer you get. Let's dive in. Money is never the goal, it is only the most honest test of your ability to master your own life. That's not philosophy, it's fact. A slice of life where money stops being just paper and becomes either a map to freedom or a prison for blind habits. And perhaps you won't believe it, but the more people chase wealth, the more the world creates new kinds of slaves. People who live as if they are free, yet every morning when they open their eyes, they have to sell their time to something they no longer believe in. So if there is a path to wealth that doesn't cause you to lose yourself, would you dare to walk it? Welcome to the simple path to wealth. The simple road to sustainable riches. But don't rush to think this is yet another get-rich-quick book. This is a manifesto for anyone who has ever doubted the system, ever been drained by debt, ever thought they weren't smart enough to understand finance. You don't need another expert, you need someone to recount their own map. And J.L. Collins has done exactly that, like a father writing letters to his daughter, no embellishment, no preaching, just reordering things everyone thinks they know but few dare to live by. Let's summarize this book together. Introduction. When my daughter was little, I started writing letters about money to her. Not because she asked, but because I knew the day would come when she would need them. The day the world stops being as gentle as children's storybooks. The day money is no longer the bill mom gives for the supermarket, but the thing that decides whether you'll be free or chained to a job you hate. Back then I thought simply, write it down so I don't forget. Write it like a map so my daughter wouldn't have to stumble blindly down the same paths where I fell. I used to believe money was a tool, something outside me, emotionless, that just needed managing. Until I realized it is part of every choice I make, where I live, what I do, who I love, what I can refuse, and what I have the courage to pursue. Once my little girl said to me, "Dad, I don't want to spend my whole life thinking about money." That sentence startled me because it was true. Thinking about money your entire life sounds utterly unappealing. But then I understood, if you don't think about money, money will think for you. And when it does, it isn't gentle. It forces you to nod at jobs you hate, forces you to live where you don't love, and worst of all, forces you to ask permission to live the life you want. I've been there. In the early years of my career, I had no right to say no. I needed the money. And when you need money, you don't truly have freedom. You can go to work every day, wear a suit, shake hands, smile at the right moments, but deep down you know you're not steering your own ship. That's when I began to understand FU money, a not so formal but very accurate concept. It's the amount of money that lets you say no, not to retire, not to lie around all day, but to have options. So when your boss says something ridiculous, you can smile and walk out. So when you want to cycle across Ireland for a month, you can do it without asking anyone. So when your daughter wants you at her 3 p.m. school performance, you can sit in the front row instead of secretly texting to skip a meeting. I used to think freedom was a luxury. Turns out it's a necessity. And to get it, you don't need to win the lottery, make genius investments, or start $1 million startup. You just need to spend less than you earn, invest the difference, and avoid debt like poison. It sounds simple, doing it is hard. Because this society, from advertising to media to even your relatives, whispers in your ear that you need this and that spending more is living, that ownership proves your worth. But I've lived long enough to know consumption doesn't fill the void inside you, it just keeps you busier, more dependent and more exhausted. Debt is the most sophisticated form of shackles. It doesn't lock you in 4 walls, it locks you in endless days of working just to pay interest. Every time you swipe a card because you deserve it, remember, you just sold a piece of your future freedom. I know people who make piles of money yet still live in constant fear, because every month they pay mortgage, car, international school fees, fancy vacations, all on borrowed money. And when crisis hits, market crash, job loss, health decline, they have nothing left but panic. I'm not writing this to scare anyone. I'm just recounting it as someone who once went through naive years about money, who once believed he controlled everything, then woke up after life slapped him a few times. I made bad investments, pulled money out at market bottoms, listened to experts who later turned out to make money by scaring others. I got caught up in diversification, picking hot stocks, calculating leverage. Then one day I realized, the simpler, the more effective. And the most effective thing is investing in the whole market, no stock picking, no market timing, just patience and refusing to panic. That's when I came to VTSAX, Vanguard Total Stock Market Index Fund. A boring choice for thrill seekers, but a sustainable path to freedom. It's not a rocket, it's a freight train, slower but certain. I didn't write this book to inspire. I don't believe in preaching. I believe in handing you the map, showing you the swamps where I sank and saying, if you want to avoid them, take this road. I'm not writing for people who want to get rich quick. I'm writing for people who want to stay free for a long time. For people who understand freedom doesn't come from having more, it comes from needing less and controlling yourself. Finally, I want to say this, there's nothing wrong with not caring about money, but there is a price. And if you let yourself drift with consumerism, deceptive financial advice, and markets you don't understand, one day you'll wake up and realize you can't do anything except keep living a life you didn't choose. I don't want that for my daughter. And I don't want it for you. Part 1: Shaping Your Financial Mindset. When I was young, I believed freedom came from earning a ton of money. I worked hard, climbed ladders, spent carefully. But the further I went, the more I realized, money doesn't set you free unless you know how to look at it correctly. Not everyone with a lot of money is free. Not everyone with little money is miserable. What decides everything is how deeply you understand money and who it serves in your life. This opening isn't here to teach you how to get rich. It's here to strip away illusions. I want you to stop, turn around, face the right direction, before you start running. Because if you run the wrong way, the faster you go, the farther off course you end up. Let's start with something familiar: debt. I've been in debt. Not because I was poor or reckless, I just believed in buy now, pay later. I thought it was a smart tool. Turns out it was a velvet-lined noose. Debt doesn't make you poor instantly. It quietly erodes your options, bit by bit. It turns every decision into a negotiation between what you want and what you have to do. Debt is like a deceitful friend. At first it lets you buy things you can't afford. Then it demands you work jobs you hate to pay it back. Then it disappears, leaving behind the habit of spending beyond your real means. You stop living on real money and start living on future money, money you haven't earned yet but already spent. There was a time I had only a few $100s in the bank, a pile of bills, and a job I clung to like a drowning man clutching a straw. I know what loss of control feels like. And that exact moment taught me, having money is worth far less than having the right to choose. And the right to choose only arrives when you have FU money. I didn't invent the term, but I use it like a compass. FU money doesn't have to be huge. It doesn't need to make anyone jealous. It just needs to be enough so you can say no when your gut is screaming it. Enough so you don't nod when you want to shake your head. Enough so you can live true to yourself. For me, it was the money that let me quit a high-paying job to cycle around Ireland. It was what gave me the right to sit in the middle of the day watching cartoons with my daughter without reporting to anyone. It was why I could say yes to worthwhile risks and no to cheap temptations. People often ask me, can anyone get rich? I always answer with a different question: do you have the discipline to spend less than you earn? If yes, you're already halfway there. The rest is just time and consistency. Getting rich isn't the result of genius. It's the outcome of small, repeated choices: walking instead of buying a new car, bringing lunch instead of ordering delivery, investing in index funds instead of chasing hot tips. I know it sounds boring. No magic. No secret code. But truth is usually plain, so plain most people ignore it. Then they chase sweeter promises, experts drawing complicated charts, strategies to catch bottoms and tops, guarantees of double the market returns. They search for certainty in uncertainty and pay for it with their own money. One early lesson: the market doesn't owe you anything. It doesn't care who you are, how you feel, what you expect. It moves by its own logic, up, then down, down, then up. If you act like you can predict it, you lose. But if you enter with patience, a long view, and no hurry, you witness something close to magic. Every dollar you put into an index fund doesn't just sit there, it quietly multiplies, like planting a seed. You don't need to yell at it to grow. Just leave it alone and don't keep digging it up to check if it's sprouting. One of the biggest paradoxes I've seen: the simpler it is, the more powerful it becomes. I used to try to be clever, frequent trading, technical analysis, watching macroeconomic indicators. Then I looked back and saw the only thing I accomplished was paying transaction fees and getting tired. The moment I gave up being smart, I started actually building wealth. I chose VTSAX, Vanguard Total Stock Market Index Fund. Regular, automatic investing. No panic. No euphoria. And I watched the balance grow, not because of luck, but because of boring repetition. If you're looking for something thrilling, I might disappoint you. I don't have a strategy to bend the market. I don't know how to turn $1,000 into $1 million in 2 months. But if you want a way to never have to bow to a boss for the rest of your life, if you want real choices in your life, then maybe I can help. People fear the market. I don't blame them. Flash crashes. Red screens. Doomsday headlines. It feels like facing a wild beast. But here's the funny part: that fear is almost never proportional to reality. Strip away the noise, simplify, and over the long run the market is one of the most reliable friends you'll ever have. I've written before that there will be another big crash someday. I don't need a crystal ball. History is enough. Crashes always happen. And after every one, the market recovers, slowly, stubbornly, persistently. That's the nature of economies, not a straight line, but waves. The problem isn't that it falls. The problem is whether you panic. The biggest flaw I see in most investors isn't lack of knowledge, it's overconfidence. They believe they can beat the market. They think by picking the right stocks at the right time they can take a shortcut. But the market isn't a place to prove how smart you are. It's a place to practice humility. I tried picking stocks. I thought I was good. Sometimes I was right. But overall, I didn't win. What I won today got taken back tomorrow. That's the market. It tests human nature, greed, fear, ego. If you can't control yourself, you become prey. If you truly want financial freedom, you don't need to be an investment genius. You only need 3 things. Live below your means. Invest the difference in a low-cost total market index fund. Don't pull the money out when the market panics. Boring? Yes. Because this isn't a game of excitement. It's a test of patience. And I've never seen anyone fail because they were too patient. During one brutal market drop, I sat in a coffee shop, opened my phone, and watched my portfolio lose over 40%. I took a sip, sighed, and did nothing. Because I knew that moment, silence was worth more than any action. In investing, the more you do, the more likely you are to make mistakes. All the outside noise is a trap. Every click, every strategy switch is a step backward from freedom. The winners are the ones who can do less, but do it effectively. Sometimes the winner is simply the one brave enough to stand still. You don't need to understand every corner of the market. You just need to pick the right vehicle. I chose VTSAX not because it's magic, but because it owns the whole market. Owning it means owning a tiny slice of thousands of businesses. The longer you hold, the more you benefit from the overall growth of the economy. People love to complicate things. But personal finance shouldn't be a maze. I believe in simplicity because simplicity is the only thing strong enough to survive decades. I used to be drawn to colorful advice. In the end, Minimalism brought me home. This isn't a call to live miserably. I'm not preaching ascetic saving. I'm advocating intentional spending. Don't buy because someone else has it. Don't spend to soothe anxiety. Use money as a tool, not as anesthesia for the soul. And when you have surplus, don't let it sit idle. Put it to work. The stock market is the only place I know where money makes money while you sleep, provided you don't wake up and ruin everything out of fear. You don't need to over-engineer your financial journey. You just need to look at it with clear eyes and an unhurried heart. If you can do that, you'll have something most people dream of but never reach: permission-free freedom. I'm not trying to convince you. I'm just telling you the road I walked. It may not be for everyone. But if something inside you whispers that you want to live differently, listen. Part 2: Harnessing the most powerful wealth-building tool in the world. I no longer remember exactly when I started doubting traditional financial advice. I just know that after reading too many financial newspapers, listening to too many experts on TV, and then looking at their actual results, I realized most of those clever-sounding words weren't making me richer. They were only making me feel small, stupid, and in need of someone else to manage my money. So I decided to try the opposite. Instead of constantly changing strategies, I stuck to one path. Instead of trying to pick winning stocks, I invested in the entire market. Instead of trying to time the market, I ignored timing altogether. And the paradox was, I made more money, not because I was smarter, but because I let go at the right moment. There's one thing few people want to accept: the stock market is fundamentally a wealth machine for the patient and a poverty machine for the impatient. Whenever the market surges, headlines cheer, investors get excited, people rush in as if stocks are an elixir. Then when it crashes, as it always does, those same people panic and run. They buy high, sell low, and blame the market. But the market didn't do anything to them. It simply reflected the emotions of millions of people. It is the most honest mirror you will ever look into, showing you your fear, your greed, your impatience, and your inflated ego. I've been terrified too. Black Monday 1987, I remember it clearly. Prices fell off a cliff. I watched a quarter of my portfolio vanish in hours. And I did what most people do: I sold everything in a panic. That mistake haunted me for years, not because of the money lost, money can be earned back, but because I betrayed my own principles. I acted on emotion instead of reason. It was a painful but necessary lesson. After that, I changed. I started looking at the market differently, not as a battlefield to conquer, but as a growth engine I simply needed to participate in patiently. I stopped asking, how do I beat the market, and started asking, how do I stop beating myself? And I discovered the most powerful weapon I've ever known on the journey to wealth isn't some magic stock, isn't some complex financial instrument, it's something so simple it's almost boring: the Total Stock Market Index Fund, specifically VTSAX, Vanguard Total Stock Market Index Fund. You don't need to know the name of every company. You don't need to watch economic news every morning. Just put money into VTSAX and let it do the rest. VTS is the whole market. When you buy it, you buy a tiny piece of thousands of American businesses, from Apple down to the corner grocery store you've never heard of. And because you own everything, you don't have to choose. You don't have to worry if one stock crashes, hundreds of others will pull you up. People mock index funds. They say they're boring, that they're for lazy people. I don't care. If that boredom buys me freedom, I'll happily be lazy for the rest of my life. I used to get pulled into sophisticated advice: diversify your portfolio more. Add gold to hedge inflation. Hold bonds to reduce risk. It all sounded reasonable. But the more complex it got, the more lost I felt. So I returned to minimalism. Just one fund. Total stock market. You can add bonds if it helps you sleep better. You can adjust the allocation if it feels comfortable. But for me, the core remains simple. Because in investing, the simpler you keep it, the fewer mistakes you make. I meet young people who ask, what if I can't buy VTSAX? I tell them, no problem, find another low-cost total market index fund. The lower the fees and the less tinkering, the better. If there's no total market fund available, go with an S&P 500 index fund. It's not perfect, but it's good enough. And if you're not investing in the US market, that's fine too. Many countries have excellent domestic index funds. Or you can access the US market through international ETFs. Don't let technical barriers stop you. And remember, what makes you rich isn't picking the perfect fund, it's investing consistently. Investing is repetitive behavior, like planting a garden. A little every week, a little every month. Not one big planting and one big harvest, but many small plantings over a long time. I don't know what the market will do tomorrow. I don't need to know. Because I'm not investing for tomorrow, I'm investing for 10 years, 20 years from now. And over that kind of horizon, I believe the economy will keep growing and the market will keep rising. I believe that not out of blind faith, but because I've seen it happen through crashes, recessions, wars, terrorism, pandemics. The market always comes back, not immediately, but always. You can be afraid of risk. I was too. But the biggest risk isn't losing money. The biggest risk is never investing, and then one day looking back with regret when it's too late. One of the most common misunderstandings I encounter is the belief that investing has to be complicated to be trustworthy. I don't blame people for thinking that. The entire financial industry profits from making you feel that way, making you feel not smart enough, making you dependent on their charts, their jargon, their expertise. But the truth is, you don't need them. You don't need a financial advisor charging you 1% a year. Because that 1%, compounded over decades, can eat 25 to 30% of your lifetime wealth. Imagine saving and investing diligently your whole life, only to quietly hand over a third of the result to someone else, just because you thought you weren't smart enough to steer your own ship. That's why I chose the simple path. Not because I'm cheap, but because I hate waste disguised as professionalism. I believe anyone can manage their own money if they're willing to learn the few things that actually matter, and more importantly, if they dare to trust themselves. Let me say a word about bonds, the thing many people still see as the safe foundation of a portfolio. I don't deny their role. But personally, given my age and risk tolerance right now, I no longer hold bonds. Stocks can be volatile, but if you're young and have time, that volatility is your friend. Bonds help you sleep at night, stocks help you wake up richer. About diversification, you might think you need international funds or other asset classes. Maybe. But remember, if you own VTSAX, you already indirectly own many global companies listed in the US. Apple sells iPhones in China. Coca-Cola sells in over 200 countries. Microsoft is everywhere. VTSAX isn't just America, it's the world in one small package. And then there are questions about retirement accounts. My answer: use everything you can. For 401k, Roth IRA, traditional IRA, HSA, whatever is available. They're all tools to defer or avoid taxes. I don't love tax law, but if the game is already designed with advantages, why not take them? I especially love the HSA, Health Savings Account. If used correctly, it's a triple tax-advantaged account. Contributions are tax-free, growth is tax-free, and withdrawals for medical expenses are tax-free. That's one of the best deals out there. But whatever accounts you use, whatever you invest in, always ask, what are the fees? You can't control the market, but you can control fees. And you'll be shocked how much a difference even 0.5% can make over 30 years. One more thing I've learned over time: the ideal portfolio isn't the one that maximizes returns. It's the one that keeps you steady enough not to sell when things get ugly. I've seen people with optimized portfolios panic sell during crashes because they couldn't handle the pressure. I've also seen people with slightly less perfect portfolios hold firm. Guess who wins? So if you need 20% in bonds to sleep well, keep it. If you want a little gold, Bitcoin, or real estate for fun, add it. But don't let those side items derail the main engine. The core is the total stock market fund. Everything else is seasoning. And if you're still wondering how much is enough, Here's my answer. When you can live on 4% of your portfolio each year without worry, you've reached financial independence. The exact number varies by person, but the principle doesn't change. Part 3. The magic beans of finance. This is the part where a lot of people start feeling uncomfortable, because it tears down things that seem untouchable. Picking individual stocks is an art, financial advisors are trustworthy, dollar cost averaging is the safe strategy. I call all of these magic beans beautiful fairy tale ideas that people pass around for years, only to end up tangled in a maze they built themselves. Let's start with Jack Bogle, the father of index funds. He wasn't just the inventor of a powerful investing tool, he was the sworn enemy of the American financial industry. Because what he created took billions of dollars out of the pockets of organizations that thrive on people's lack of understanding. Bogle said it plainly, most actively managed funds cannot beat the market over the long term. They charge high fees, constantly shuffle holdings, and market themselves like they have magical powers. But look back after 10 years and you realize you would have been better off just buying the whole market and forgetting about it. I've seen fund managers act like wizards. They draw charts, make predictions on television, share beat-the-market strategies. But here's a secret: if you want to become a market expert and get on CNBC, all you need is confidence and the willingness to say something definitive. Whether you're right or wrong doesn't matter, people don't remember. They just remember you sounded certain. The market doesn't need fortune tellers. It needs calm. But media thrives on drama. When the market rises, headlines scream, opportunity you can't miss. When it falls, they yell, nightmare ahead. And if you follow along, you become a puppet jerked by your own emotions. Here's something strange: the smarter you are, the easier it is to get burned. Because smart people tend to be overconfident. They think they see things others don't. They think they have an edge. But the market doesn't care about your IQ. It only cares whether you stay disciplined. Let's talk about stock picking. I tried it. I thought I was good, and sometimes I was right. But over the long haul, I was no better than someone throwing darts blindfolded. There is no model, no formula that lets you pick winning stocks consistently for 10 or 20 years. And if you get lucky a few times, don't think you're a genius. You just happen to be standing in the right place when lightning struck. This truth is hard to swallow. People don't like hearing that all their analysis is mostly meaningless. They want to believe they have a special gift. But the market is the place where being special gets punished, not rewarded. The more you try to stand out, the more likely you are to get wiped out. And then there's one more thing that gets mythologized in the retail investing world: dollar cost averaging, DCA. People say if you have a large lump sum, don't invest it all at once, spread it out over time to reduce risk and avoid buying at the top. It sounds sensible, right? But the data usually says the opposite. In most historical periods, investing the entire amount immediately outperforms spreading it out. Why? Because the market tends to go up over time. The longer your money sits on the sidelines, the more growth you miss. Of course, if you're genuinely afraid and spreading it out helps you actually pull the trigger, I understand. But don't pretend you're optimizing. You're buying peace of mind at the cost of opportunity. I once had a friend in the finance industry tell me, JL, if everyone did what you say, just buy VTX and hold, then what would happen to people like us? I laughed. Exactly. That's the problem, and that's exactly why so many people in the industry dislike this message. Because I'm not just telling you a simple way to build wealth. I'm telling you that a large part of their business exists by selling complexity that doesn't deliver proportional value. In many cases, they're actually an obstacle. Let me tell you a quick story. I once watched a financial TV show. A sharply dressed expert was drawing complicated lines on charts. With total conviction he said, next week the market will correct 5 to 7% due to Fed pressure and weakening macro signals. I turned off the TV, not because he was wrong, but because I knew no one can know that. And the more certain someone sounds about the future, the more dangerous they usually are. Becoming a market expert isn't hard. You just need to speak loudly, confidently, and make specific predictions. If you're right, you get praised. If you're wrong, no one follows up. The game repeats endlessly. And the audience keeps getting led around. I call it the arrogance of expertise, when people think they know, but they're really just playing the role of knowing. And the longer they play it, the more they believe it's real. I almost got sucked in too. I used to read exclusive research reports, get pulled into poetic-sounding strategies. But after enough burns, I learned one rule: if anyone promises you high returns with low risk and secret insider knowledge, they're either a con artist or about to go broke. The market has no secret sauce. It's a place where, if you're humble enough, you learn to let go of ego and do the right thing over and over. Not because you're sure you'll win every step, but because you know winning happens across the entire journey. If an investing strategy makes you feel excited, it's probably wrong. Real investing doesn't feel thrilling, it feels like boring repetition. And it's precisely in that boredom that wealth actually compounds. I once called index funds the thing you buy once and never have to think about again. A friend joked, "Sounds like a marriage." I said, exactly. A good long-term investment, like a good marriage, requires commitment, patience, and the ability to close your eyes when things get chaotic. I'm not telling you not to learn more. But learn the right things: how to control your emotions, how to tell noise from signal, how to have the courage to stay on your chosen path even when the whole world seems to be running the other way. And if you still doubt, if you think the world can't possibly be as simple as I'm describing, that's okay. I don't need you to believe me right now. I just invite you to try ignoring the complexity, the fairy tales, pick one clear simple path, and walk it for 10 years. If after 10 years you're not closer to freedom, I'll be the first to admit I was wrong. But if it works, you won't need me anymore. And that's the most beautiful gift I can give you. Part 4: What to do when you've reached the destination: financial independence. Reaching financial independence is a lot like climbing a mountain. You've crossed the valleys of debt, hacked through the thick forest of doubt, navigated the sheer cliffs of market crashes and recoveries. Now you're standing at the summit. The wind is gentle, the view stretches in every direction, and you ask yourself, now what? That's when you have to learn an entirely new skill: how to come down safely, not how to keep climbing, but how to live sustainably from what you've built. Everything starts with one number that sounds almost arbitrary but carries enormous power: 4%. I don't remember the exact moment I first encountered the 4% rule, but I remember the feeling: quiet, strange relief. The idea that you could withdraw 4% of your portfolio each year, adjusted for inflation, and have a very high probability of the money lasting 30+ years felt like a door opening in a concrete wall of anxiety. Of course, it's not perfect. Nothing in the future is 100% certain. But it's a solid starting point. And if you stay flexible, willing to cut spending in bad market years, you'll likely be fine. I've met people who finally hit financial independence and then felt lost. They didn't know how much was safe to spend. They kept living like they were still in the accumulation race even though the finish line was long behind them. The fear of running out of money is incredibly hard to shake after decades of saving. So I started small. I withdrew tiny amounts at first and watched. I tracked every expense against the 4% guideline. I stress-tested worst-case scenarios in my head. And as long as I didn't panic, everything kept working. Only when trust grew did I really start spending, not recklessly, but intentionally, on experiences, on helping others, on things that don't show up on a balance sheet. Withdrawal is an art. It requires sensitivity to market conditions, to your personal needs, and to what you actually want your life to be about. Some years you might withdraw more when opportunities arise, other years you pull back to preserve capital. But if you generally stay within the 4% boundary, you're in a safe zone. How exactly do you withdraw? Sell stocks? Take distributions from retirement accounts? Live off dividends? The answer depends on your setup. In my case, I have money spread across taxable brokerage accounts, for 401k, Roth IRA, etc. I usually draw first from the taxable brokerage, no forced distributions, fewer tax complications, letting the tax-advantaged accounts keep compounding. I pull quarterly, just enough for living, travel, gifts. I don't try to hyper-optimize. I try to keep it clear and manageable. If I needed a 5-line Excel formula every month just to know how much I could spend, I'd already strayed too far from simplicity. There's one thing almost no one talks about when discussing financial independence: the emptiness that can follow. You spend decades working, saving, investing. Then one day you don't have to do any of it anymore. Time suddenly becomes wide open, and you're forced to face yourself without the excuse of "I'm too busy." What do I live for? What do I still want to give to the world? That's when many people rediscover giving. Some wait until they're really rich to think about charity. I believe the opposite: the sooner you start giving, the sooner you understand money's true value. I don't have billions like famous philanthropists, but I have one simple rule: give as if you're already rich. I use donor-advised funds, a simple financial tool that lets me move investments into a giving account, get the tax deduction now, and decide later which causes to support. It's efficient, tax-smart, and keeps me in control. I'm not here to save the world. I just believe that if I have the ability to live without asking permission, I also have some responsibility to help others gain that same possibility. And then there's the relationship with Social Security, or whatever public pension system your country has. I don't believe the system will last forever in its current form, but I also don't fear its collapse. Because when you're financially independent, whatever comes from Social Security is just extra, a bonus, not the foundation. When the time comes, I'll decide whether to claim early or delay to 70 for the maximum benefit. Either way, it won't be my lifeline, it'll be gravy. By this point, the question isn't how much is enough anymore. The question becomes, how will I live with what I have? There is a path, not flashy but sturdy. It doesn't promise riches in 3 months. It has no get-rich-quick tricks. But it's real. And if you walk it all the way, you gain something money can't buy: the right to live life on your own terms. When money no longer controls you, you understand something deeper: freedom isn't in the account balance. It's in the quiet calm when you look in the mirror and know you're no longer pretending. I have no ambition to change the world. I just want you, if even a small part of you believes life shouldn't be dictated by interest payments or strangers' investment advice, to trust your own ability to take control. People often ask me now, "What do you do all day?" I say, I write. I walk. I call old friends. I reread beautiful passages. I sit still in the afternoon light. I live, not to prove anything, but because I finally can. Conclusion. There's a sentence that has followed me for years: everything you want is on the other side of fear. The interesting thing is, when you finally cross that fear, you don't find a triumphant rush. You find quiet. I wrote this book for my daughter. But now I know it's for anyone who has ever wondered, is there a path to financial security that doesn't require me to lose myself? The answer is yes. I've walked it. As you reach the last lines of a book like this, you're not just finishing reading, you're finishing a silent conversation. Someone who's been there has spoken everything they truly believe, and you've listened with a patience that's rare in this hurried age. Thank you for spending time with The Simple Path to Wealth, not just as financial advice, but as a living thing that carries experience, perspective, and honest skepticism about what passes for common sense in money matters. If anything in this journey has value, it isn't a formula. It's the ability to look at yourself and ask, am I living for money, or is money serving a life worth living? I hope you'll take one more minute, not to like or subscribe out of habit, but to write a private thought, a reflection, even a disagreement about what you heard or felt. Sometimes an honest reaction is worth more than polite praise. That's how we keep the conversation alive, beyond the page, through invisible connections. And if there's another book that once troubled you, made you rethink money or life, or one you're simply curious about, why did people rave about it, suggest it? Send the title. We can open it together with clear eyes, sharp questions, and no compromise. Because real understanding never stops at the last page. It lives in the reader willing to walk farther. And if you've listened all the way to here, I believe that's you.